All right, investors, if you're looking for an undervalued growth stock that's down over 63% from its all-time high and down over 50% year to date in 2025, and I'm going to highlight that company for you right now, and that's Lululemon. Lululemon, I'm going to share with you the company's growth rate over the previous decade, what management had to say about the rest of this year and the growth outlook for international markets and the impacts of tariffs. I'm going to share with you the operating profit margin over the previous decade and the return on invested capital. I'm also going to highlight some of the recent developments in the competitive dynamics in the industry. Finally, I'm going to share with you my proprietary discounted cash flow valuation model and a look at valuation on a forward price to earnings basis. I'm going to share all of that with you to support my argument for why I think Lululemon stock is an undervalued growth stock investors can buy now and hold for the long term.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
As I highlighted in the introduction of the video, Lululemon stock is now down over 51% year to date in 2025. And if we zoom out to a 3-year period, Lululemon stock is down over 63% off its all-time high. Now, 2025 will be a challenging year for Lululemon. The company will be significantly negatively impacted by the increases in tariffs because it manufactures nearly all of its products outside of the United States, so it will need to pay to import those products into the United States. Additionally, unlike Nike, Lululemon, its overall revenue is more concentrated in the United States. Its international markets are less developed than for Nike, and so Lululemon, on a percentage basis, will be more negatively impacted as a result of the increases in tariffs than Nike will. And that's not good news. But if you look back over the decade, Lululemon has generated a compounded annual growth rate of 19.5%, and its revenues have increased by more than 5x in the previous decade. That demonstrates to me a great customer value proposition. People are willing to pay these premium prices for Lululemon's products, and they are premium prices, well above that of most other providers in this category. And that's a difficult achievement for Lululemon. And it's been able to do this and, of course, still generate great profit margins as you're able to do when you have these premium prices. Speaking of its profit margins, Lululemon's operating profit margin at 23.4% is up significantly from the 17.3% in 2015. And as you recently saw maybe in the comparison video I did with Nike, Lululemon's operating profit margins are well above that of Nike. Lululemon is generating better growth, better profit margins, and that demonstrates 2 out of the 6 most important things I look at when I'm evaluating a business for investment is the customer value proposition and the unit economics. Because as I say in my book, it's easy to offer customers a great value if you're willing to lose money on the bottom line. I can make a great product that cost me $100 to create and sell it to you for $10, and you would be thrilled about my business. You would come back as often as you need this product. You would tell your friends and family and coworkers about this product, and my business sales would likely explode. But how long can I stay in business if it costs me $100 to create a product and I sell it for $10? Not very long, right? If I'm losing $90 on every sale. So that's why in my book, I talk about how the customer value proposition goes hand in hand with unit economics. If a business can offer a great customer value proposition and generate healthy margins while doing that, that demonstrates an incredibly strong potential for a good investment because they have a great product that generates good margins and they can sustain that longer term because customers will keep coming back if you offer them a great value, and your business can continue and invest in growth if it's generating good margins. Lululemon has those first 2 steps locked down, right? A+ on the customer value proposition, A+ on the operating profit margin or unit economics for Lululemon's business. So that being said, this year is going to be a challenging year for Lululemon. The tariffs, as I mentioned, very negative. The management team, it was nice to see that their revenue growth for the quarter came in at the high end of their guidance in the most recently completed quarter. But revenue growth in the United States was just 2% in the most recent quarter. 2% for a company that is accustomed to growing its overall revenue at a compound annual growth rate of nearly 20% in the previous decade. So a big step down for Lululemon in revenue growth here in 2025. But the good news is that they've seen improvement in the trend over the last few quarters. And their quarter one revenue performance and what they're seeing so far in the second quarter, they maintained their guidance for the full year. And I like to see that this year, especially because macroeconomic growth is slowing down, tariffs are decreasing purchases worldwide, decreasing employment worldwide, decreasing activity worldwide. And so when I'm looking at businesses right now during earnings season, I'm happy to see a business just reiterate their guidance. Just tell me, even though the year has been difficult, the year is going as planned in terms of our revenue for the full year. And so that was nice to see that Lululemon's revenue is looking decent for the rest of the year. By the way, this document I'm looking at is the company's most recently completed earnings call with Wall Street analyst, and I make this document available for my channel members, as well as dozens of other companies I've evaluated their earnings call transcripts. Really important insights that come from the company's CEO, CFO, and other important management team members. You can have access to all that for less than $5 a month. So another metric that's really strong for Lululemon is its return on invested capital, which is 37% in the most recent trailing 12-month period. That's actually down from 41.7% in 2016. That's not great that the trend is moving down, but the number itself at 37% is really strong, especially if you compare to the weighted average cost of capital, which is around 10% for Lululemon. It has a more than 3-to-1 ratio ROIC to WACC, which is another important thing I look at when I'm evaluating the stock. So I've also calculated a proprietary discounted cash flow valuation for Lululemon. This is my own model I've created. I forecast all of the free cash flow I expect this business will generate between today and the very long run. And I come up with a discount rate, which I calculated at 10.78% for Lululemon. And I calculate an intrinsic value, which for Lululemon came out to $237. I updated this valuation today. Actually, I had to downgrade Lululemon's free cash flow expectations for 2025, 2026, 2027, 2028, all the way out to 2035. I decreased the amount of cash flow I expect its business to generate because of the impacts of tariffs. Tariffs make the business less profitable because Lululemon has to pay higher costs to get its products to the United States. If it decides to bring manufacturing back to the United States instead of outside the United States, its cost will increase by even more. So its free cash flow now expected to be much lower than previously expected as a result of tariffs. So I downgraded its free cash flow expectations. Even after those decreases, the intrinsic value per share at $237 is well above the current market price of $186, which is near its 52-week low. So the stock still looks undervalued even after I downgraded the outlook following the impacts of tariffs. And then finally, when I look at the valuation on a forward price to earnings basis, Lululemon is trading at a forward PE of 12.6, which is near the lowest it's been since January of 2024. It is the lowest it's been since January of 2024. So all these reasons I'm using to evaluate this business and come to a conclusion that it's a undervalued stock that investors can consider adding to their portfolios. Of course, risks remain. The impacts of tariffs will be negative and significantly so. But one thing I haven't talked about just yet is the industry is responding in a way that I like. The industry overall, including Nike and Under Armour, have all moved towards more premium pricing. So they're all indicating, they all said to each other, well, not to each other, but What I mean by that is when Lululemon and its management team is holding a conference call with Wall Street analysts, they understand that Nike is listening. They understand that Under Armour is listening and other industry managers are listening to what they're saying in that conference call. And so they send messages through those conference calls. And as an investor, I've learned to decipher those messages and what it means for investors. And Nike, Lululemon, Under Armour, they all sent that similar message. They said we're all going to decrease incentives, decrease promotions, sell more products at premium prices or full price. So no more discounts, no more promotions, no more, buy one, get one 50% off type situations. They're going to decrease that meaningfully. And for investors, that means better profit margins because they're all keeping prices higher. It would be different if one of them keeps prices elevated and then another one lowers prices. They can take market share. So that's why it's important that once the leader of this industry, which I consider it to be Nike, came out and said, we're going to start selling products at more premium prices, everyone else said, we like that idea. You're the leader. We like that you're going down this road. And they all said the same thing, like, yes, we agree. We are also raising prices. And that's what you like to see when you're investing in an industry. That's the kind of competitive dynamics you like to see. Decreasing competition, not fighting each other for market share by cutting prices. I try to avoid those kinds of situations, like I've been warning you about with the electric vehicle industry, which is in that situation. They're saying, oh, you're cutting prices? I'm going to cut my prices lower than you. Oh, you're going to do it again? Fine, I'll do it again too. You want to do it? Let's go. Let's keep going. I'm not going to back down. You don't back down. And they just keep going at that price war in the race to the bottom. And industry-wide, margins are collapsing in the electric vehicle industry. And I've been warning you about that since 2022. And almost every EV stock is down meaningfully. Many of them have even gone bankrupt. So avoid those kinds of situations. And this situation where everyone is saying, yeah, let's raise prices. That's the kind of industry that's attractive to investors. That's where I see in the last few months this industry is heading towards. So for all those reasons, I think Lululemon can be a great addition to your portfolios at current market prices. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.